Adversity, bring it. The struggle, we welcome it. Snooze on life, never that. We are Dave Regina and Mike Pirelli, and this is the No Snooze Podcast. Come on. Welcome back, No Snooze Podcast, episode 141. I'm in the booth, as always, with the big three. Michael, the show Pirelli, Claudio, the voice, Valenzuela, and I am Dave.
Oh, wow, we got a camera.
I am Dave, the body, Regina. If you're on YouTube,
First off,
if you're not on
CV
YouTube, you
didn't
better
tell
go.
us any of this stuff. He slowly walked us down here. We got brand new mics. Very nice.
Yes.
We got CV, a camera on CV. The voice is
Yeah.
now the face.
That's right.
We got to get a new nickname.
Listen, and you guys thought this whole time that Orgain wasn't making money, and now we got new.
Is that where the money's
and
coming
now
from?
we got new microphones and new camera work.
Listen,
this is
if
incredible.
Orgain's paying, I love Orgain.
Right? You know what I'm saying?
I put it in my hair in the morning if I
I
have a
bet you
stressful
can't
day.
guess the protein that we'll drink in a little bit. But before we do that, today's topic, we're gonna kind of be, we're gonna do a.
We're going to flow.
Yeah, we're just gonna flow. As you can see, I don't have my iPad today, which is a first.
What?
Right? Yeah. We're
I
gonna
have
do
an
some
iPad.
financial
It's
talk. Just some things that we've been going through, but I think the conversation will flow nice. Another rough week, man. Another rough week. I know you hate it when I bring the somber news. Is that right? Somber? Yeah, right.
Somber is
I got to
correct.
check my verbiage now with you two.
Somber's.
But I lost my Aunt Rita, and we laid her to rest on Friday. I feel like
How
this
old?
year, she's in her 70s,
Oh, okay.
but I do feel bad because my cousin Anthony, he's the only son, and my Uncle Tony, his father, is also not doing well. So it's just a tough thing to watch, and although she was sick for a while, it's a sad thing, like you come up with your family, obviously, but as we get older, it's like you just don't realize the time that I should have spent even more time, and I just have the best memories of going to their house Christmas before Uncle Joe and Aunt Linda's house. Sidebar, that's Uncle Joe's sister, just to give you the
I
context.
need a family tree.
Right? Family tree.
It's very difficult.
The pool in the back. I mean, we did some Easter egg hunts there. Just those memories as a child were great. So rest in peace to my Aunt Rita.
Shout out Aunt Rita. And anyone, again, we say it a lot on the podcast, but if you're going through your own struggles, you're having a rough time, our hearts go out to your prayers. And then on top of it, like we talk about, I just know our family's going through some stuff. There's people I know who are going through stuff. And I just keep trying to give people the benefit of the doubt when I get angry or irritated with things.
Yeah.
And say to myself, like, maybe they're going through something.
Right.
Like something's going on probably. So it's, like you said, growing up is very humbling.
It
You
is.
realize you're not invincible. And there is a clock on all of us.
Mm.
So don't waste it.
Mm.
Funny story about Dave.
About that.
The reason I'm having trouble with his family tree is we used to go places. He used to introduce everyone as his cousin. That was his thing.
Cuz.
And then everyone's his uncle, everyone's his aunt. So when he says stuff to me, I'm like, are they really a
Yes,
cousin or an
yeah.
aunt? Because
No, Aunt Rita's
of
blood.
that.
Aunt Rita's
How many times
blood.
did you introduce me as your cousin?
I mean, listen, cuz
how
everybody
many
knows.
cousins do you have? Lots.
Honestly, I don't have that many, but I have a whole lot.
Yeah,
I
that's what I'm
got a
saying.
whole lot. But everybody, I think people still refer to you as my cousin, and
I
Frankie
think so.
too.
Yeah. Me and Frank and a couple other friends for that have been places enough where we're kind of fixtures and people are like, oh, I know him,
I'm a
and
fixture.
when I used to go visit Phil in Union, people thought I went to school there, me and Rob.
Mhm.
Yep.
I was like you and I. We have. I'm surprised I didn't get my degree yet from Bentley University.
Exactly.
They didn't
Yes.
send it. They
Exactly.
didn't
That's a
send
perfect
it.
example. We used to spend weeks
Yeah.
at Bentley.
They didn't send it yet.
Jay Westrall made the Hall of Fame.
I saw that.
Did you?
Listen, all I know is that I wanted to.
Are you in King Will Haywood Hall of Fame?
Yes, I am.
You are.
No, they have a Hall of Fame. No, I'm just on the wall.
Do they?
I'm on the wall.
We should petition for
Wall
that.
of Fame, maybe.
You are the whole wall. You're the only person on the wall.
But yeah, listen, Jay Westrall, man. I don't know if you guys have heard the story on the podcast.
Here we go.
Number 1 player of the year, Division II at Bentley University, just got inducted into the
Bentley.
Bentley Hall of Fame.
Athletic
Congratulations, brother. But just remember who busted that ass and horse at Frank's wedding. What a great time. Speaking of Frank's wedding, this thing still fits like a glove.
Yeah, I'm very surprised.
Right?
Were you this size at Frank's wedding?
I don't remember.
I'm neither.
I
Good
don't-
wedding.
Good, I think.
Yeah, good wedding. I was very nervous for my best man speech
Yes.
because it was like kind of the first time I was being exposed. I was kind of coming out to all of
Yeah, so
Alyssa's
the first
family.
time Mike was coming out to Alyssa's
Yeah.
family. Absolutely.
But Alyssa, I remember being the last person that everyone met. And I think they did it strategically.
Mm.
They were like, he's kind of a strong personality, especially at that age.
Yes.
There
yeah,
was no Dana to like, keep me grounded. No, there was, but not in the beginning of
Yep.
the relationship. And I just remember being like, wow, there's a lot of people.
That
at this
wasn't Big
wedding.
Mike though, right? No, that was
mediocre Mike, maybe. I was in the middle. I wasn't huge. I wasn't thin. I don't remember. A lot of different sizes.
Yeah, a lot of different mics. That was kind of like my hairstyles growing up.
Exactly.
I did so
Your
many.
hairstyle was like my weight, and
Yeah.
it still is.
Yes.
Still trying to get control of it.
We're fluctuating between 10 and 45% body fat. Not bad.
Yeah.
How's the gym going? How's the room?
I had a nice couple of days, a good run the other week, and overall, I feel like I'm back in the groove. I got a little cocky, and the kids had a couple rough nights in a row, and then I got basically sent back down to earth. But I'm definitely doing my no ropes, definitely bopping around with the kids. Yeah, staying active, getting handy. So moving cinder blocks expends a couple cows.
Yeah, I see you.
know?
I see you. Speaking of no ropes, I thought of you. So my father plays basketball on Thursdays with his men,
Sick.
with his guys from back in the day. And they get good runs. And he's like, Dave, I need a little warm up. And there's a big misconception because when your body's cold, you're actually not supposed to do a static stretch, right? And a static stretch is just as simple as, standing there and like,
Which is typical.
yeah, that's a typical stretch.
Yeah.
You bending down, touching your toes, but you're static, meaning you're not moving. Static stretching is best after a workout, after your muscles are already warmed. So the best thing to do is what's called the dynamic workout, right? So he said, well, what the hell is that? Like, what is dynamic? And I'm like, well, dynamic just means movement. So like jumping jacks. I said, jump rope. He's like, jump rope? He's like, I'd love to jump rope, but I really can't do it. I said, well, act like you do jump rope and do no rope. He's like, Dave, that's stupid. Why would I do that? And I said, Mike does it all the time. He was like, I can't. I look foolish. And I'm like, no, you could be like Mikey in the garage just doing no ropes.
Listen, the good thing is you never mess up, right? The
There's-
rope never hits your ankles.
Right, yeah,
Doesn't hurt. You can go as fast as slow as you want. It's genius. I'm surprised I think I'm just ahead of my time. I think in 5-10 years, people will be like, this is the new wave. The no
rope
ropes.
is the way. Yeah, man. My calves are booming lately.
I got a peek at
Boom.
mine the other day.
They look good.
I was putting a sock on. When you're at a certain angle.
Whoa. The microphone.
the mic almost knocked me
flew
out.
away.
I got a great chin. I got a little peek. It was looking good. It's not a Dave calf. A Dave calf, you can live on a desert island for a month. Mine, you're making it maybe 4 days, maybe
Wow.
4 fortnights.
What was I gonna say? Dang, I had something. Oh, what'd you think of my abs?
They look good.
Peeking a lot of
You
hair.
know what? You're like everything about you is big. Like your abs are big, right? CV, did you catch? First off, let me just say,
Everything about you.
every
big. I
time I look down
Good
at my
stuff.
phone, like I'm in the groove, right, of a day. When you're sending a couple emails, making a couple calls, starting to get into a flow,
like it.
and then all of a sudden, a
Ding.
picture of you pops up on my phone of your naked body, abs. And I'm like, is it typical for people to send out ab pics to their friends? But that's what we do.
That's what we do. Yeah, but the first pic that
It
I
looks
sent
burnt,
you and Frank was well, that was after a workout, after I was in the sauna for a long time, and then I went home, but I didn't shower.
looked
and I was
very
just
red.
hot.
Yeah, you look
Very
really
hot.
red. I was like, where did he go?
Where did he go? That could have been when I burned my butt on the tanning bed. I don't know. But the first picture that I sent was Frankie and I back in the day.
Amazing.
I mean,
You guys were twins too.
we were little.
Real little.
We were
but you felt
little.
big.
I
which was key.
thought I was huge.
Remember the
back
one
then.
where Frank's flexing his tricep?
Oh man.
I mean, we all have embarrassing photos of us as younger folks. I've done some embarrassing photos. But in your head at that time, we felt enormous.
Absolutely.
I still feel enormous, even though I'm not.
I do too. And I mean, my head's always been big, but I actually, ironically, have a very small head.
Yeah, you have a small head.
Right,
Your head's
but
not big.
I feel
Well, the circumference of the top of it's small.
Right.
But I think you got a big jaw. Like I think, so I saw this thing that people with beards that grow in thick come from descendants of warriors. Because
me.
it was grown so that you can absorb contact if someone punched you, which clearly, who was a lover back in his
yes,
day? This
you,
guy.
You.
And you're the warrior.
Well, I could tell you this. So, did you see what
CV, lover.
your boy A Horms posted?
Hey,
Hermosa?
Worms, that's the new nickname. First off, not my boy. He looks more like you than me.
I mean, the strip is hilarious.
He doesn't care.
I know.
If you were worth, how much is he worth? Did he
A
say?
couple hundred.
Whatever. Say he's a billionaire.
Yeah.
Think about the stuff you'd be wearing.
Right,
You might be
right.
walking around with a loincloth.
Probably no clothes. Yeah.
We're lucky you're not a
But
billionaire.
speaking of great interview, Ed Milet and
Who's that?
and Hormozy, they linked up.
Can you say his name right?
A Horms,
Hermosi.
Hormozy. We'll get him on the pod.
H-E-R. It's women, whatever
It's
appreciation. month.
H-O-R. So you're calling him a woman?
I
It's
think it's-
Women's Appreciation
isn't it
Month? What does Alex
H-E-R?
Hormozy have to do
No,
with
her
women's?
in it. Isn't
Oh.
it H-E-R? I think you might be right, actually.
It's
I might have been
H-O-R.
wrong this whole time.
There you go. The big realization happened on air. You saw it first.
So
No
Ed
Snooze
and
podcast.
Alex.
So Ed and Alex linked up. Great interview. And then also Andy Frisella. Oh no. Ed and Alex did one a while ago. Andy Frisella linked up with Alex Hormozy, and they had a great interview. So if you check it out, it's on the Real AF podcast. Andy Frisella. But awesome stuff. Dang, there was another thing that I just wanted to tell you. I gotta start interrupting you more.
Yeah. On the beard talk.
Oh,
I actually-
beer talk. That's what it was. That's what it was.
Okay.
So you talk about contact. I don't know if you're on YouTube and you can see this. This actually is not a chin here. I have grown a beard that extends way past my chin.
You're catfishing people.
Yes, 100%. So I posted that thing that Alex posted,
Amazing.
and it was something that basically said, if you're ugly, just grow a beard because it leaves half your face to other people's imaginations. Which is true, because if you look from the side,
It's
it looks like I
mysterious.
have a large chin. But if I were to cut this thing off, I mean, my chin ends like right here.
So I used to sign my cards to Dana Thunderlips because that used to be my nickname.
Yeah.
Self-proclaimed.
Those were butter days. We won't talk about those. The
Butter days.
The butter days.
Good days. And I have to say, when you shave your beard, not to gas you up, you got some big old lips.
Yeah.
So I
They
think
hide under here.
you're doing us a favor, keeping them a little covered.
Yes.
Else
keep
they'd
them
be
covered.
distracting.
Yes.
I remember he did that for one episode, and I'm like, those are distracting.
Yeah. The beard. The
Was
beard.
that Jordan one?
The beard definitely. I don't know. It gives it a different illusion. But I've grown this thing in now. But no wonder why they say, "Wow, he could really take a punch to dudes that have beards," because you're not hitting.
You're
anything.
absorbing. a
You're
little
hitting
bit.
hair.
Well, they
It's the
still
best
hit
hack.
You. I mean,
Dude,
they don't
hit your
miss you and
hair.
hit your hair. It takes the impact.
But think about it. If you were to hit this, you're missing everything and just hitting hair.
But then that's just a missed punch. You're not absorbing any contact.
But I could sell
a
it.
different
I could sell
concept.
it and be like,
Oh, like you actually got
Yeah,
hit.
like I got hit.
for movies. Are you gonna be in movies?
right? Should I?
I got a
We're
finally.
fired up today. We're fired up.
Finally, I got a mirror in my shower to shave. Well, I'm
Oh, in your
amazing.
shower.
So like, I get super irritated, and I shave probably every 2 to 3 days. And a lot of times I'm doing it to be consistent with the videos because I put out the videos and they're supposed to be like evergreen and just for continuity. And I got a shower. It was like $15 on Amazon. Best thing I ever got. Amazing.
Fogless?
Fogless. But the key is it fogs up. You just gotta like put water on it and then it stops fogging,
but
which
it's
is weird.
Oh, but it is fogless?
It's
or it fogs up?
fogless, but
But
you
it
gotta
fogs
add
up.
water first. It's weird.
Gotcha. Now, do you look at yourself while you're taking a shower?
Yeah, while I'm shaving.
Oh, while
It's
you're
small.
shaving.
It's not
Gotcha,
like a
little-
friggin' full length. What
I'm
you would
thinking
like.
of that. I'm thinking of that. I'm
Damn
like,
it,
wait a minute.
you never showered.
I
You'd be
wouldn't
flexing
shower.
the whole time.
My back would just get clean because I would just literally be flexing into the mirror.
So there's a Livy loves Beauty and the Beast, and she keeps saying like
Uncle Dave.
Gaston.
The bees.
Well, yeah, she wants to be the Beast, so she doesn't want to
Okay.
be Belle. She wants to be the Beast, and she starts naming who everyone's going to be. And there's Gaston. You probably never
Who
seen the
is that?
movie because you haven't grown up.
Gaston?
Gaston is the bad guy,
Gaston.
but he's very your nickname might be Gaston.
Gaston.
Very like every time he passes a mirror, he looks at himself and like flexes
What does
and
he look
whatnot.
like? Let me see.
Yeah, look him up.
Let me see him.
And she keeps saying Uncle Shush. Uncle Chris is going to be
Uncle
Gaston
Shush.
because he always walks by mirrors and does the chin.
Oh my God, Uncle Chris. Gaston. Oh, big dude.
Big dude.
Big dude, no hair though on his face. to change
We always
that.
like a little diet talk.
Yep. Talk to me.
I stumbled on, so I've been sticking with the chicken thighs, ground beef,
Well, let me guess. Pork
shoulder. Yeah, the basics, right?
Tell us, Mike. We haven't
I
heard.
can't afford steak because I'm trying to keep my cash flow low. And I stumbled on some because I usually have potatoes with it, right? And someone said if you boil potatoes and use ground chicken, you can basically make like chicken nuggets. And it would be like an easy way to hit my macros and kind of like be simple, right? If you can make kind of these pre-made chicken nuggets when Livy's having her chicken nuggets. I love chicken nuggets. Do you like chicken
I
nuggets?
love nuggies.
Incredible. And if you can keep them within the macros and you're like, I need something quick, and you just throw them in the air fryer, bang, 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 on the run.
Mhm.
You'll be snacking on the way to an appointment. You know,
So
nugget.
are you counting your Mackies?
Yeah.
You do?
Yeah.
Yeah,
I still
don't-
measure my.
I don't count anything. I just make sure. The only thing well, that's not true. The only thing I do count is 200 to 250 grams of protein, depending on the day.
Yeah. I mean,
But that's all I count.
I
don't
just
count
stick to
anything else.
AC's diet, and I'm a little more liberal. So what I'm
Sticks to the diet.
No, I would stick to the diet, and then I'm a little more liberal on the weekends. And as we get into the spring, I'm just going to tighten up as I go, which has worked. When I'm gradual and not extreme, I'm able to apply things a lot easier.
Put the camera over here.
Have you heard about that?
Dane. CV and I would like to taste these new cookies that you
I was
got.
going to say,
all right.
talk about timing.
Yeah, really.
I'm like, oh, I'm tightening up. And she's like, you know what? I'm going to start making cookies, and they're going to be effing delicious. There's a little almond in them, so it tastes like a mix between like an Italian cookie and like a sugar cookie.
Wow. Listen, Dane, if you don't send cookies over here, I'm going to tell everybody a story about how you got hit by a car back in the day.
You know
I don't want to do it though. All right?
You know what? I'm gonna make her practice, so I'm gonna make her make some no snooze ones.
Yo, side note on that. So Dana, when she told me, well, we were living together at the time when she got hit by the car, right? But she literally, I still remember it to this day. Because she's like, the car was going so slow, but she had her headphones in. But she said she rolled up the windshield.
See, you had the same reaction that I did.
Oh
She
my
told
God.
me we were in the city on the way to like a fundraiser for a previous company, and she told me the story. I couldn't stop laughing.
I know.
I don't know why.
Can you just picture Dana rolling up a
She was
windshield
like, I
and
felt
then
like
rolling back
roadkill.
down?
She's like, I felt like roadkill. I was laying there, and then Billy showed up,
Oh
and
my
I was just
God.
laying on the ground. Everyone was staring at me. It's kind of sad.
It is sad. It is sad. I know, but it's a little.
I couldn't stop laughing. I thought she was lying.
Oh, but I mean, yeah, but her leg was messed up though.
It was pretty messed up.
That was messed up. Oh, man.
On that note,
On that
Jesus
note,
Christ, it's
should,
dark.
Should we let them know where you get the protein at? Are you ready for that?
I don't drink protein anymore.
Hey,
All
listen,
Whole Foods.
CV, let them know where we get
Dave.
the protein at.
Whole Foods.
We wanted to take a quick second to let you guys know that we partnered with our good friends over at Orgain.com. We're happy to offer our listeners 30% off by entering the code NOSNOOZE30. Again, that's NOSNOOZE30 for 30% off your first order. If you're on the market for a new protein powder, nutritional shake, protein bar, or Mike's favorite, collagen peptides, Orgain is your one-stop shop. As all of you know, my Crohn's disease is currently in remission, and the only protein I use is from Orgain. My personal favorites are the chocolate peanut butter and the vanilla bean. With the code, you can try a 2-pound tub for under $20. Talk about not snoozing. Go get yours today. Now, back to the epi.
All right, so like we said before, we're gonna do a little financial talk. So
Not financial advice, though.
yes, definitely not financial.
Look
advice.
right in
This
that
is-
camera, Dave.
Here we go. This is information, not education. You like that one, Mike?
No, you need to say this is not financial advice so we don't get sued. Say it again.
Okay. This is not financial advice. This is information,
There you
not education. Brought to you by the No Snooze Podcast, produced by Kai Visions.
Not financial advice.
So yes, Mike, tell me what you're thinking about, man.
So this is what I'm thinking about, right? There's much in life, there's decisions that are perfect decisions, but maybe not necessarily the right one, right? So there's decisions that financially make the most sense financially, mathematically, but there's no other factors of like stress, opportunity cost. The life is simple, but it's not, right? So my big example of this, the big example is financing your own home. And there's a lot of people from the school of thought of you'll never pay it off because if you pay off your house, all of your equity is trapped and you are, basically sharing a lot of the risk of the real estate market.
Mhm.
If you have, say your house is worth $500,000 and the market tanks, that affects you 100% on that, right? Say
Right.
it so it goes from 500 to 300, effectively you lost 200.
Yes.
Versus if you only have 10% and the market corrects, the bank is sharing in some of the downside,
Correct.
right?
Mhm.
That's so in a perfect situation, perfect math, you would always finance your home. What I've been thinking about lately, now having kids and having more risk and the mental strain, is that I'm starting to sway on the side of I'd much rather pay off, even if it's not the perfect financial move, pay off my current home so that my liability, my biggest life expense is off the table,
Mhm.
right? You still have to pay taxes, you still have to pay upkeep, but the mental, the freeing of the bandwidth and the mental stress of just trying to cover a mortgage, which People would argue it's good to have, which I think it is. But for me, I'm really toying with the fact of, all right, well, what's the sound financial move and what's the sound mental, stressful move? And where can I find a balance in the two? You know, it's because at the end of the day, what's the goal? Is the goal to have the most money ever, or is the goal to live a great life, share a great life with people? I go back and forth about it, right?
Yeah.
I know the goal is not to be, I enjoy the game of money. I enjoy trying to earn a lot of it, but there is a point when you have to sit back and ask yourself, as CV has mentioned, how much is enough, or, you know, maybe I'm optimizing for the wrong things. Does that make sense? That ramble?
Yes. No, absolutely. And you said a word just in liability. And I do want to be clear about this, right? Because so all three of us own homes, single family homes, right?
Yeah.
When you own a single family home and you're living in it, it's actually not an asset, it's a liability.
Yeah.
Right? It can be utilized as an asset. But there's a big difference because technically, if you wanted to have an asset as a single family home, then you would be responsible to rent it out for more than your mortgage is to then put some cash flow in your pocket. Now it's an asset because it's being utilized as positive cash flow.
Yeah.
Right. But what I kind of want to explain today is something that I'm going through. And it's a way of financing to have some additional funds available to you. So I've been very open about, wanting to purchase my next investment. Now, although I don't plan on doing that probably this year, my biggest thing was making sure that I had availability in liquid cash available, right? So I happen to, I am a firm believer in putting down more money than not if you plan on utilizing what's called the equity in your house, right? Because as soon as you put down that 10 or say 3%, right? Because I've done a 3% financing on the first investment property that I own. Your equity up front is not as much as if you put down 20%, because technically that 20%, you're almost immediate to get that 20% back if you were to take it out, right? Does that make sense?
Yep.
On a base level? So there's different ways of financing your actual home in terms of taking out, when it comes to finances, there's different options that are available to you. You can do what's called a refinance, right? And when you refinance, that's basically pulling out all of the positive equity in the house to hopefully get a mortgage rate deduction.
So also you're paying off a previous loan,
right,
for better terms, and then potentially pull money out.
Yeah,
so you don't have two loans.
Right, correct.
Yeah, so like say you have a current loan
Yep.
and the rate's higher, you have another loan that pays that off, and then you basically can pocket the difference.
Right.
Or just try to minimize your monthly.
Correct. But now with a refinance, that puts money, the actual money, into your pocket, so you're responsible on paying that back immediately. Clear?
Say that again?
When you refinance the home,
Yeah.
right, your mortgage, you still have to pay that mortgage with the added money that's now in your pocket.
Yeah.
Because you have to pay that back.
Yes, but not all at once.
No,
paying
correct.
You when you refinance, you actually extend your timeline again, or you shorten it.
Right. But say they give you $100,000,
yeah,
and you don't have the ability to just pay back $5,000. Your terms, you still have to pay back the full amount.
The mortgage.
Correct.
And then on top of that, a note is that $100K or whatever you pull out is tax free.
Correct.
So in theory, it's like if you're in a bracket where you pay 35%, you're making whatever, 135, whatever it is.
Right. Correct. So that's one option. Then you also have what's called an equity loan.
Yeah.
Right.
Yeah.
An equity loan. Now, say my house, I bought it in 2019, which I did, and it appreciated in the amount of $150,000. An equity loan is saying, here, Dave Regina, here's that $150,000 in positive equity, but now the terms of repayment begin immediately on $150,000 of that equity.
So it's a second loan on the property.
Correct.
It's another lien.
Right. So it's technically a second mortgage
Yeah.
to the house. Does this make sense, CV? Am I being clear. And tell me
doing
if I'm
good.
not clear.
You're doing good.
Okay.
You
Now-
got your MC over here that's like
Right.
jumping in with the ad libs.
Right.
Nice.
Well, now there's option 3, which is something that I just started researching. Probably, I mean, maybe 2 months now we've been kind of discussing it. And this is called a home equity line of credit, aka a HELOC. Right? So a lot of people, we hear that HELOC and you're like, what does that stand for? Home equity line of credit.
Not to break this up, but I think calves, like a HELOC seems like a good exercise to build them.
The HELOC in the room.
I've been doing HELOCs. You're like, what?
Yeah, what? The HELOC? So what this option does is, in my opinion, the least amount of risk that's involved with pulling equity out. So take that same example. I bought my house for I bought my house in 2019, and to date, it's appreciated, say, $150,000 of positive equity. What that HELOC does, they say, here you go. Here is up to $150,000 in a line of credit available to you. Now, technically, they're saying here is a credit card, but with that credit card, you have now an astronomical limit, right? Because now you have a $150,000 credit card available to you. But this is where the HELOC differs from all the other options. Because in the height of the market, if I take out that money and I don't use it, that money just sits in my pocket until I'm ready to pull the plug on I know you guys don't like that terminology, but pull the plug on an actual investment, right? Now,
so when it goes, explain this to people. So it goes into basically like your account. Say you bank with a certain bank.
It's very weird.
It goes in your account and you see it in the account.
Yes.
Correct. But it doesn't charge you interest yet until it comes out of the account.
Right. So this is the difference in it. And these are the positive benefits that I believe to be in this HELOC. Again, this is information, not education. You do what you think is best. So now you have this $150,000 available to you, and you can also take cash out of this, which is absurd. You literally wake up one morning, I swear to God, and you have that money available to you in an account. Now, undisciplined people can really get in a lot of trouble with this.
Yeah.
Because if you spend that money like crazy, because again, it's your money, it's available to you.
Yeah.
Now, for 10 years, you're only responsible for 1% interest only, which is a big thing, because if I do an investment, I use it properly, and I use $100,000 for an investment, technically my repayment is only $1,000 a month. If I use $50,000, my repayment is only $500 a month.
So is it, so you said for 10 years?
For 10 years.
So is it accumulating in the background?
Right. So, well, over this 10-year period, put it back on me, CB. Over this 10-year
You've
period,
seen my confused face.
over this 10-year period, you have the option of not using this. Now, if you don't use this, it doesn't matter. It just literally goes, it goes back and it stays there. Now, if you only use $5,000 and now your balance is $145,000 and you pay back that $5,000, now your balance again for the remainder of the 10 years goes back up to $150,000.
Mm-hmm.
The good thing about the HELOC is the interest rates are so much different and so much better than credit cards. So, for example, I have a JetBlue credit card, which I fly everywhere for free, which is great, but my interest rate is not good. It's 23%, right? Which is astronomical.
Yeah.
The HELOC is a line of credit, so you can use it as a credit card at a rate of, right now, the going market is between like 8 and 13%, depending on credit and depending how much money you take out. Now is a really good time for people to look into this if you own a single family home, because they are offering, certain companies and certain banks are offering up to 100% financing. What that means is if your value comes back and you are that $150,000 in equity, they will give you dollar for dollar $150,000. This is almost unheard of, because this is how financial crises happen. Imagine if I'm a banker and I take out this $150,000, the market goes to doo-doo. I have a $400,000 mortgage that I can't pay anymore. I lose my job, and you just gave me the additional $150,000 in credit. So for one person, you're pretty much out, and I go bankrupt. Yeah, so I'm in bankruptcy. But you as the bank are now not only out the mortgage, but you're also out of the positive equity of that house.
Yeah.
Now you times out by thousands and thousands of people who lose their jobs. This is literally how financial crisis happened. This is why they don't offer 100% financing. Typically what you'll see is 80%, 85%, 90%. But depending on your income and your credit history, it's very important. So if you have good credit, you can qualify for more. But there's certain banks right now that are offering 100% financing.
So the 1% for 10 years, at the end of the 10 years, does it balloon? Like
No, so it doesn't balloon. So at the end of 10 years, if you have a balance, that becomes a personal loan at a rate that's set. So I think the rate is 15%.
Got it.
But worst case scenario, say you spend $150,000 right away.
Yeah.
And we're just using ballpark numbers.
So a lot of people will use the HELOCs for renovations,
Yep.
Deposits on properties, and then try to pay them off with the income. And
Correct.
But you just got to be careful, because
yes.
if you can't, you got to pay it back, and then you have more against the property that you borrowed against.
Correct. So the downside to this is literally discipline, because you have this available. If you don't use it, again, there's no downside. Whereas with a refinance, you're responsible right away for the full amount. With a personal loan, you're responsible right away for the full amount. This is a loan for the full amount, but you use it as you please.
Yeah. A lot of people will use it to buy their next property as they're selling the previous one. And then once they sell the previous one, they pay it off, and then,
or not even sell, right? Like what I plan to do now, what I just did is my house has, I mean, you were the agent on the house.
Never seen it.
It has appreciated hundreds of thousands of dollars in 3 years, which, yes, you get lucky on that. But I do foresee a decline in the market on housing appraisals for a short period of time. Before then, I think it goes back up. So I've been studying this, and I believe this to be the height of the market, to where now I'm taking out all my equity available in my pocket to utilize on the next investment opportunity, right? So I don't really plan on using this. Here's another good option for the HELOC. Say you have $10,000 in credit card debt. Say you have $20,000 in student loans. Right? Your credit card debt is 24% of interest, and your student loans are what? What's typical for a student loan?
I don't know. I was fortunate to have it.
It's like 6% or whatever. Okay. That's okay. So you take, did I say 10,000 in student debt? 20,000. So 20,000 in student debt, 10,000 in personal debt. So you have 30,000, right? Now, instead of making these different payments to different credit cards, you use that lump sum of cash on the HELOC and you pay off your debt.
Consolidate it.
You could basically consolidate your debt, but you pay it off.
And then 1%.
So now your credit goes up, obviously, because you cleared your debt, and you are only responsible for 10 years on 1% payback. Now, I wouldn't advise paying only the 1%, but if you're doing that for 3 years, say you're like, listen, I'm going to consolidate all my debt, and what I'm going to do is only pay 1% back. So 1% of $30,000 is $300, right?
Mm-hmm.
Is that right? So now I only have a $300 payment. I could tell you right now, I make probably $2,500 a month to $3,000 a month in payments just to credit cards, because I use it and then I pay it. So imagine what I could do if I just said, I'm going to focus for 3 years. I'm only going to pay 1% back, right? I'm going to stack the extra cash that I would be making payments on to everything else, but put that in a savings account for when I'm ready to now buy this property, right? So all it does is it gives you a timeline, but with available cash in your pocket to kind of maneuver things. For me, my industry that I'm in, my salary is basically a set salary, right? I have a good salary, but I don't make overtime. There's not too many options to make additional money with my career, right? You are different because you can, fluctuate, I don't know, $50,000 a year if you wanted to, right? Just
sometimes a month.
Sometimes a month, right?
Yeah.
Depending on the sales. That's not me. So this option literally gives me liquid assets available to utilize for whatever I want. So right now, my play is to consolidate all debts, save that extra money, and then have the money available for when I find that next investment.
So the thing that I want to comment on, which I love all of it, and I think and I've said on the podcast before, if people learned more about finances, they'd be in such a better position, even if they do nothing with it.
Right.
Just to kind of know how things work, and then know where the companies that they're getting these loans are incentivized by, what the credit cards are The credit cards are incentivized by you keeping a balance. Right. They don't make money if you pay it off. They transaction costs, all that stuff, but they want people that are going to leave a balance
and not be disciplined.
Correct. So their whole incentive is get you to open as many as possible.
Correct.
Because the chances, if you have 10, you're going to forget about a couple. I'm guilty of that.
Yep.
When I started the new company, I'm like, you know what? Let me get some points.
Mm-hmm.
I fell to it. I usually am pretty good. I fell to it. I'm like, I'll get a couple extra points. It's free money. But then I realized like just even having 2 credit cards for the company is stressing me out because I like to look at one page, see my balance, see what I spent the month of, and then see what kind of is coming in that month.
Mm-hmm.
It's nice and simple. When there's a third or whatever, another screen, a second screen, for me, I found that it's distracting. And I'm like, oh, well, I feel like I did good this month, but this other account has the big balance because I had my licensing fees and this and that.
Right.
So although people will say, have a couple credit cards, it's better, this and that. For me personally, I like simple. So I will, in the next couple months, cancel that additional credit card. Yes, it's not great for credit. People see it, whatever. I have decent credit, but I'm just trying to really streamline everything because I find, at least personally for me, when I get too complicated, and it's not a crazy complication, but what you're saying, having multiple things that are pulling from you and having to stay on top of it
Mm-hmm.
stacks the deck against you versus having one. They're like, all right, I just got to make sure I pay this off. This is my one loan. I have one thing to worry about. It frees you up to think about other things.
Right. And also, this is where I really do tie in the gym and fitness mindset to something like this. Because again, if I'm, a shithead and I'm like, oh, I'm going to live lavish and go on vacations and do all this stuff, of course, you can do that with a HELOC. If you want to have a family vacation and you want to treat yourself, do that. Cool. Do it once though, right? Don't go, spending $100,000 and things that are not going to return money to you. Take it a step further. Also, what I did is, when it comes to the credit card, I actually opened up another credit card. Well, think about this. 0 interest for 18 months.
Yeah.
So what I'm going to do is actually move the debt before I pay it off.
Yeah.
So for 18 months, I'm moving a 24% rate to 0.
Yeah.
Right? Just moving that over. Now I'm 0 interest for 18 months. Then at month 18, I take the HELOC, boom.
Yeah.
I make the payment. But all that does is buy me more time and availability.
Yeah.
Because I hate interest. I hate it. I did some math the other day on it, and I'm great with my credit cards, and I have a very good credit score, and I'm proud of it because I built it up over time. But I still have, I keep a balance. So this just frees me up and gives me an opportunity to keep more cash available.
Who's offering
which has been a problem
0%
for me
right now?
Who's offering? There's a Chase card that I'm looking
Okay.
at, but with
I like
this card
Chase.
though. So I mentioned the vacation, right?
I just said I'm closing credit cards. I'm like 0% sounds kind of nice.
Well, it's really
especially
good
for business.
And I'll send you the one. So also with this, and I mentioned the vacation because with the incentive of the 0% comes 75,000 points. Which is a free, so it's
just vacation.
more free vacation. So why wouldn't I take advantage of moving it over to 0? But again, you got to be disciplined. You can't just move it over to 0, then accumulate debt, and then not pay.
Is it a business card or personal?
Right? Personal card.
Okay.
But there is business options as well. But so I'm gonna get the 0%. I'm gonna get a free vacation, and I'm not even gonna have to use my HELOC for 18 months. You know what I'm saying? But this is game. This is real. This is free game because it's available to each and every one of us. And even if you're like, well, you know what? I don't have a house or, I can't do this equity thing. Yeah, neither did I.
Yeah.
I never would have thought, and I never learned this concept in school. And I've never even gotten down to like base understanding. Whereas now I feel like I can honestly even explain it and it makes sense to people.
Yeah.
You know what I mean? But I was the same exact way. You were the same way. Claudio was the same way. And then we're also told in society, I guess, this has been told to me, you buy your house, you're grateful for your house and, you make the payments and yeah. But the reality is if you just buy a single family home and even if you pay it off and you're still responsible though every single year for the taxes on that property. So if you just live in that house up until you die and you never utilize the positive equity in it, you're still making payments towards this thing. Like, what is the point of that?
Yeah.
Why not utilize it to your benefit? Put that positive equity in your pocket, have it available to you.
Yeah. No, I mean, everything you're saying is right on. The at least for me, I'm trying to keep it simple with all the credit cards and stuff because not that I've been disciplined, but I haven't really, it wasn't worth it for the headache of doing all of it versus just like, I come back to like the way I get ahead for me and my profession is just make more money. So it's like, yes, I can spend a lot of time moving things around, but at the end of the day, unless I'm in extreme circumstance where the cash flow is like null, just focus on, picking up some new clients, expanding the business. But I do like it. There's times like this last year where the market's been quiet. The holidays, traditionally, the cash flow basically stops, if not very minimal. So a lot of it at the end of the year is me going through my finances and figuring out, all right, where can I cut costs? How can I stay lean so that when the spring comes around and I start making some more money coming in, that I'm prepared.
Right.
So that's kind of why too I lean more on the investments and want to do more on the investment side,
Right.
because that smooths out my risk of the up and down of cash flow,
Mm-hmm.
and it's more predictable.
Right.
So I'm trying to kind of move into more of a consistent cash flow versus kind of the spotty ones of like a lot all at once, which it's very tempting to pay a bunch of stuff off, do renovations when you have all the money in the account, but the money goes fast.
Right.
You know?
Right. Yeah. And speaking of cash flow, I mean, another option with this HELOC. Well, first, let me take it down to base level first. You want to really build your credit up, right? And the way to do that is to utilize your credit and then make the payments not only on time, but to try to pay as much as possible to keep that balance low.
Yeah.
I have a friend who, after I did the HELOC, they went and did it too. Good credit, 710.
Wow, put them on blast.
What?
The credit.
That's not bad though. It was 710.
No,
I mean,
it's good.
You know,
I'm
it's
just saying,
good.
but you're sharing
Right.
credit cards.
Yes,
Credit's
but
good too.
so here's the difference between credit, right? And
You know who you are.
again, very proud of this, but I am over an 800 now.
Here we go.
Listen, but it's taken time.
The body, the business, and 800 credit score?
Listen.
Are you shitting me?
But hear me though.
Sorry.
I used to be. I remember this.
You like that?
Shout out to Joe Viveros,
Oh,
right?
yeah. I remember Joe.
who financed me my first Honda. And when my credit score came back, and this was in 2013, so it's not that long ago, 10 years ago,
Yeah.
my credit score was 550. And I chose to not have a cosigner on it because Joe told me, pay the extra money, prove that you can, build your credit. And then after that lease of 3 years, I went from like a 500 to like a 680, which started giving me some leverage, right? So I don't want this to come off like, oh yeah, I'm 800 credit score. No, I was in a really bad spot just 10 years ago.
Yeah.
But I did certain things to obviously get there. So if you're not in any position, what you want to do is continue to build your credit, because here's why. Even at a 710 credit score, right? This person, for whatever reason, the bank that we were using, they have a 720 as their premium financing opportunities.
Yeah.
So this person had pretty much the same available equity as I did and comparable income because they also have some investment properties. The only difference was a 710 credit to the over 720. Forget the 800 because I think it really doesn't even matter.
Yeah.
Right. But from 710 to the over 720 mark, they only got approved for 80% of the financing, and their rate was about 3.5% difference from me. So I believe it's really important to make sure that your credit is in line. And honestly, it doesn't take that long to build your credit. You just have to be disciplined with it.
Yeah, and ask questions to whoever's doing the loan with you. Be like, hey,
Right.
is there,
Yes.
if I increase my credit by this, does it make a big difference?
Right. Correct.
So I've talked about in the past, but a lot of times I'm able to kind of figure things out by just asking what I really want. So like when we refinanced, I was like, how can I get my loan to be the same, and how much money can I pull out? A lot of times you have to figure out how to ask the right questions.
Yes.
Because they're just going to do what they're most incentivized to do at the time.
Right.
Right. And you got to think of that way. You got to think like, all right, these people are doing my loan. They want me to take the biggest loan possible. Whereas I want to keep even though I want to keep my payment low, but then pull money out.
Right.
So it's not ideal for them. They're happy to do a loan, but unless I don't tell them what I want and I'm intentional, they'll do what they want. Right. So that's the key thing too.
Right.
Because you can go to someone, hey, I want to do a HELOC. Oh, we can do this and that. But think to yourself, like, what do I want going into it?
Very
Right.
important.
Which you're good at, especially with like leases and whatnot. You tell the stories, you know exactly what you want, and then you just don't compromise. The other thing I want to mention is another angle to look at that's a simple one. And do your own research here. Again, not financial advice.
Information.
Dana and I have life insurance, and it's something that I started because, it's cash flows up and down for me personally. And it's great to have a big account and money saved, but that's more for extreme circumstances and emergencies. So I'm like, all right, how can I kind of have a bank account that generates income, but then I also can use as like down payments? Because for me, the biggest thing is going to be down payments, and for most people on purchasing properties, right?
Mhm.
That's like the biggest jump.
Yep.
If you want to get a property, typically you're going to have to put 5 to 20% down. In investment cases, sometimes 30. So I'm like, all right, is there some way I can kind of keep recycling a down payment? So I started investing in a life insurance policy, whole life, which we've talked about,
Yep.
and that kind of is acting as my bank. Like you're using your
Yep.
property as your bank.
Mhm.
I'm kind of using that as my bank.
How quickly can you? Because I have whole
Like a
life
day.
as well. But how quickly can you
So
turn
like,
that over, and what's available to you?
so it's you have to build it up.
Right.
So say you're contributing, and these are just whole numbers. I'm not doing this, but say you're putting $1,000 a month. You can't pull out any money until the next year, but then you can pull every dollar you put in out.
Right.
Right. So if you put in 12,000, then the next year you put in 12, then all of a sudden your cash balance is 12.
Yep.
And while you're pulling it out, you're paying interest, which is what 5 to 6%,
Mhm.
but you're also gaining you're gaining market time. Like it's still growing as if it's still in there.
Right.
So
Correct.
you're getting 2 returns.
That's
right?
the big part, though, that people need to understand.
What, the 2 returns?
No, that it's still growing. Like
yeah,
it's in
so it's
there.
still growing. You can pull it out. Obviously, you can't do much with 12 as far as like purchasing properties, depending on your market. But in my head, I'm like, all right, well, maybe after 5 years,
Yes.
if you have a significant amount, you can put up. The idea is to take that lump sum, use it as a down payment on a property, a cash balance, and obviously I have to figure out the details. But you take it, deposit as soon as you close on the property, pay down that immediately with the rents.
Yep.
If it's cash flowing, you've got to make a cash flow. And then all of a sudden that money's back in the account and you could reuse it.
Right.
And hopefully that's cash flow positive and you rinse and repeat.
Right.
And then at some point, I'm hoping I'll have enough to buy things cash.
Right. Correct.
And then you can finance after.
Boom.
So then you're real dangerous because I can go to you like, Dave, I know you got a property. I can close in a week. And then just because I close in a week doesn't mean it's very valuable to the seller.
Mhm.
Whereas to me, it's just coming from my bank account. I'm going to plan on just paying that back with a loan.
Right.
So then you get real dangerous.
Mhm.
I'm in a tough market where this strategy would have worked a lot faster in
Mhm.
like, Midwest or something where things are 50K houses. Where I am, the average house is 2.5 million.
Right.
So
Yep.
I'm not buying $2.5 million properties,
Right.
but a starter home is in the $700,000 to $900,000 range. And those
Some
aren't
starter home that is.
renovated. What?
No, I know. Some starter home that is.
So you figure
But it's
if you
market.
got to put down money for investments, you're probably getting 20%. So you've got to build that up to like 140,000.
Right.
I could still use it to go towards the down payment, but it's a long-term game plan,
Mm.
just like you're saying, where you have
Mhm.
this HELOC. So there's a bunch of ways to do it.
Yes.
But I think what we're saying is if you can figure out how to kind of reuse money and kind of recycle it
Yep.
and just keep using the same money and not have to earn new money to create new money, then that gets real fun and the
Yes.
cash flow, it's life's very simple. You got to spend less than you make, right? However you make it, whether it's investments, active, passive. And then when you're working out and you're working on your body, you got to expend more calories than you consume.
Mm.
You can get as complicated as you want.
Yep.
You can get as fancy as you want. But at the end of the day,
That's what it is.
it's cash flow in, cash flow out. And you need more in that goes out.
Yes.
Energy, you need more energy that comes in that goes out,
Mm-hmm.
right? So it's very simple. Life.
Yes. Let's do that same scenario with the HELOC, right? Because this
Yeah,
is
yeah.
I actually just I had a call with a gentleman that invests in Puerto Rico. Which
This
I love Puerto
podcast is
Rico.
sponsored by HELOCs United.
Yeah. But so let's give. I want to give a real example so people understand kind of the rinse and repeat concept too, and how like even this HELOC could take the place of the whole life if you didn't go that route, right? So
Oh yeah.
say you have $150,000 property in Puerto Rico, which is realistic, right?
First off, the more you talk about this Puerto Rico thing,
Oh, yeah.
I hope you invest because I would love to be like, I'm going to take a business trip and write it off
Right.
to come check out your investments.
Right. Absolutely.
sick.
Why not? We could do it.
I've never been.
Let's go.
And my guy that I love, Sharif Medawar,
He's big in Puerto Rico.
big time.
Big.
Imagine you and him are boys.
Could be.
Again, why am I in real estate? Everyone else is doing cooler things.
All right. So you got $150,000 property, right? To put yourself in a good spot on an investment, put down 30%, right?
Yeah.
If that works. But if you have this HELOC available to you, 30% is a good number to put down. So that'd be $45,000 on a down payment, right? The market that I know factually, Airbnb, I can rent this house out for $250 a night. And on average in that area, owners typically rent it out for 22 nights out of the month.
Mm-hmm.
Okay. So on that $45,000, before we get to that math, on that $45,000 30% purchase that we made, right? I'm only responsible on the HELOC for what? For $450. Okay. Now I have 22 nights that would be rented out at $250 a month for a total of $5,500. Okay. Now take that $5,500 minus my $450 payment. You're at $5,000, $5,050. Now also the rest of your payment on your actual mortgage of $100,000 that's remaining.
Mm-hmm.
Not a lot of money, maybe $1,000. So on a $150,000 property, you have the ability to make $4,000 off of only taking an investment from a HELOC and paying it back 1% to potentially return $4,000 a month.
Mm-hmm.
Times that by 12, $48,000. Right now, again, for 10 years, I have the ability to only make this 1%.
Yeah.
If I really wanted to hammer it home, I could pay this thing cash in 3 to 5 years.
Yeah.
Right. So talk about rinsing and repeating. You do this one time.
Yeah.
Build up your cash, pay out the things that you need to pay out. But now you become dangerous. And then also you can do the equity in the next property and the next property and the next property without really even using, yes, here's the argument, right? Because technically it's my money because it's my equity, but it's not real money to me right now. You get what I'm saying? Like I'm not responsible to use it even though I have it available in my pocket.
No.
It's capitalism.
Yeah, you
Correct.
just generate out of thin air.
You know what I'm saying? But this is how people get rich.
The only disclaimer, though, for Airbnb
Yes.
is management is very intensive.
Mm-hmm.
I have a lot of investors that ask me about it, and I'm like, it's great. And I have people that have done it very successfully,
Right.
but it's a job.
It is a job.
You have to take it
Correct.
you're a hotel. You're a mini
Right.
hotel. I'm not saying it's not,
Mhm.
it's not very lucrative, but it's a different approach.
Yes.
And you have to get real familiar with the legalities in Puerto Rico. Do you think that they're going to snap down on it? Is there a trend towards more restrictions? Like,
Right.
as long as you do your research, I'm saying go for it. I think the Airbnb strategy works for a lot of people who are getting going
Yes.
because they have time, right? They don't have a lot of money a lot of times. And when you have a lot of time and no money, then you got to invest your time to make money.
Right.
Once you have less time and a lot of money, then you go more passive route and maybe you can still do an Airbnb, but maybe get a manager. And instead of $4,000 a month, you're getting $2,000 a month, whatever it is.
Mhm.
But for you, it's all profit, right? So something I tell people, and I've had a lot of conversations with people because when you start thinking as an investor, your lens is different, right? So right now the rates are high. I argue with people, okay, the rates are high, but do you care if you were paying 10% a month, 10% on a mortgage, right? But you were making $4,000 a month.
Right.
Would you care that the rate's high?
No.
And they're like, no. And I'm like, then why are people so hung up on
Mhm.
the rates? And part of me thinks it's like the ego thing. Like, oh, I have a 3%, I have a 2%. You could have a 3% mortgage, but if your property shit, no one cares.
And if you have a 3% mortgage, which is all realistic to all of us in here, but you're not making any money, and then the person who has that 10% mortgage is actually making money on a
they
property,
don't care.
what are you talking about?
So what I've seen, and I'm trying to be more like it, is trying to, they call it, I forget what it was, date the rate, marry the returns. I forgot what it was. There's a saying
Mhm.
that a mortgage professional say. But basically, I'm trying to look more through that lens where I'm not too worried about, I'm worried more about the cash flow than the actual
Right.
percentages, deposits. I'm trying to look at the simplicity of, all right, well, if I do this, yes, 10% is not ideal, whatever it is. What is the return? All right. Is that return worth the money I'm putting in? Is the cash on cash worth it?
Right.
Versus saying, oh, rates are high, I'm not even going to look.
Mm-hmm.
Right.
Very good.
Because then you're going to sit on the sidelines and wait for the rates to come down forever.
Forever.
People
Forever.
thought, and I'm not saying it's not going to happen, right? But people I've heard a million times say, I'm just going to wait till the rates come down, right? And
That's me at times. For
yeah,
sure.
which everyone,
Yep.
I'm guilty of it too.
Mhm.
But then you think like, if the rates come down, the prices are going to go crazy again, right? In theory.
And then look at history too. Like you're not in a really bad spot. 7% right now, typical, that's pretty much what you're looking at. It's not terrible historically.
Yeah. As long as you don't overextend.
Right.
and you do your research and you get your foot in the door with properties, like I think it's much more productive and long-term you're going to do well if you have time in the market
Yes.
versus timing the market,
Mhm.
which is like the big saying.
Well, timing is big too, even on the HELOC, because really this conversation.
Well, it's different type of timing.
Yes,
You're not
but-
timing the market, you're timing your investments.
Right. And, because there could be, listen, if you bought a house in 2007 and then you looked to HELOC in 2008, 2009, it might have been pretty bad for you, right? So
Yeah.
there's certain things that have to definitely be on your side. But again, the only reason why I mentioned Rincon, Puerto Rico is because I know the area very well
Mhm.
and I've been studying the area.
Yeah.
And these are real things. And also the property that the properties that I'm interested in, there's a property manager already involved. And there's a lot of people that invest in
there you
these
go.
they're condo style, but one property manager kind of takes care of it. And you take care of them.
Economies of scale.
Yes.
Yeah. Nice.
But it's realistic stuff,
So the non-tangible at that too is like lifestyle wise, it's pretty cool. It's like I can get up out of bed to go visit my investment property in Puerto Rico.
on
Like,
the beach.
Best believe I'll want to work on this property
I-
versus you have an investment.
Mike's gonna build a fence, baby.
No,
You gonna build that?
no, I'll build you an outdoor kitchen. So that's something I think about a lot too, is like, yeah. So again, just because it's the perfect financial move doesn't mean it's the perfect move for you,
Right.
with the lifestyle you want to build, right?
Yes.
Like I could make a lot more by investing in a lot different markets. I choose to go to Greenwich because lifestyle wise, it's easy for me. I go down the street, my renters are right there. I chat them up. I'm like, all right, I'm gonna head home. I got to replace a microwave. Sneak over there. I'll sneak back.
Right.
For you, listen, I want to take a quick trip. I need a break. Let's go to Puerto Rico.
Mhm.
I'll check on my properties. All of a sudden, it becomes a business trip. You write it off. And then all of a sudden, it's a lifestyle you enjoy, right? Versus investing in somewhere you don't want to visit.
I kind of want to pick your brain on this though. So how do you feel about? So there's not many things that like really appreciate or at least maintain its value that are really nice that you can kind of wear. You know what I'm saying? Like, I'm curious on your thought process of you want to buy the watch. Like,
How do I feel about that?
Yeah.
I
What? There goes the HELOC.
So-
yeah, can you buy?
No,
Can you
no.
use a HELOC to buy a watch?
Yeah,
Is that-
you do it- you use
absolutely.
it
You
for
do whatever you
whatever
want.
you
But go ahead. No, I'm serious because for me, right?
yeah,
But before I pass over to you,
yeah.
I like certain material things, but I like material things that have an opportunity to at least maintain its value. Like, I think it's pretty damn cool that you could put a watch on your wrist, and yes, it has to be a certain brand, but you put the watch on your wrist, you could wear it for a year to 40 years, and then you can at least historically, because Rolex has been around way over 40 years. I mean, I think they date back to like 1800s. You can not only get back what you bought it for, but potentially make money on something that you just. So it's really just a savings account that the money sat there.
So here's my thought. I don't think there's anything wrong with it. My personal philosophy about it, everything, and this is something I've come to, and it's more of a kind of a lifestyle choice, for my sanity, like what is the most
Mike's like, don't bump into
No,
the
no, no.
wall. Don't bump into the
no,
wall.
what can sustain what I want to do. I really look for things that deliver a return and something that you wouldn't have to sell to realize the benefit. So I'm not saying it's a bad investment. For me, I don't want to buy and sell. I just want to buy and hold.
Correct. I mean, I'm not saying. I'm just saying if
But
everything went to crap,
This is my thought process.
you at
though.
least have,
This is what
you
I'm
know.
thinking. You can't. I mean, you could rent out your Rolex to people and let them wear it.
It's great
right?
business. You can.
You could.
think I'm joking? Yes.
people do
Luxury watch club.
Yeah.
Yeah.
So you could do that.
Yeah.
So in that case, cool. Like,
You're making money.
but
right away.
I'm not a huge fan of like the paper wealth.
Right.
You know, the argument here is like you could go to a bank and say, "Listen, I have this, I have that," and then they can loan you
Mhm.
on that. So that in that case, yeah, sure. For me, I'm just trying to be real simplistic, and I'm not a huge stock guy because on paper you have all this money, and yes, you could borrow against it, but as we've seen, people just print, right?
Mhm.
So for me, I love real estate because you can develop it, but it takes a while. You
Right.
can't just like snap your fingers, all of a sudden there's a big complex. In the banking system, they punch a couple numbers in, all of a sudden your whatever stock, whatever it is 20% less.
Right.
So I kind of err on the side of like, I'm building my portfolio and our portfolio. Yes, it's going to be great and like a great statistic say, oh, the property is worth this much. But what I really care about is how much a month they make.
Mm-hmm.
I kind of don't care about how much they appreciate. I do if I want to borrow against it, if I want to get loans, if I, some type of leverage to do more on this side.
Mm-hmm.
But for me, my focus is really on like, what are they kicking off? It's not so much the goose, it's the eggs, right? Like I want the eggs. I like the eggs because
I like eggs too.
yeah,
Big egg.
like,
Guy.
we know you like
Big
eggs.
Egg guy. Quick six, baby.
Gaston jokes in the song that he sings, and he says, "When I was a kid, I ate like 3 dozen eggs, and now as an adult, I eat 5 dozen eggs." And I'm like, "It's fucking
It's
Dave."
Dave.
Oh, I can't swear, but you know what I'm saying?
Yes,
Like,
yes.
I
You look
get
at the
that wealth
monthly.
is really built through like the appreciation and the paying down the mortgage and all that stuff. But for me personally, like lifestyle wise, I think I'd rather have that cash flow coming in because then lifestyle wise, it's a lot easier for me to make some bad decisions investment wise if I know I can bank on. I don't have this, but say you made $20,000 a month just in cash flow, you can afford to take some risks. You can get
Absolutely.
that Rolex.
Right.
You can say,
Correct.
oh, you know what? I don't even make any money. These properties paid for this Rolex. I don't care if it appreciates or not.
Right.
I like wearing it. You know what I'm saying?
Yes,
So that's kind of
absolutely.
like, but Rolexes, watches. So I also believe if you spend 50% of your time looking at watches, invest 50% of your money in watches.
Whoa.
Invest in what you know.
Whoa.
I spend
150K off of.
I probably spend 90% of my time in real estate, especially Greenwich real estate, maybe 75 Greenwich. So in my head, I'm like, I'd rather have a home game and invest 75% of my wealth in what I know.
Right.
If I lose, I lose, but I'm stacking the deck to my knowledge so
Mhm.
that I can.
At least you know. Hey,
That's very funny. I mean, invest. I mean.
That's true.
OnlyFans is booming.
It is.
Speaking
booming.
of, we got to get you an
Should we do that?
OnlyFans.
Should we do that?
You won't have to worry about any of this. Cash flow will be coming in if you had an OnlyFans.
No snooze, OnlyFans.
No,
No
Dave,
snooze,
I'm not
OnlyFans.
jumping in there.
All right. So listen, if there's one thing though that you're taking away and you don't own a property, right? It's to focus on the credit. And a lot of us, we're not taught this, and I don't know why. And I want to make it a personal thing of mine to begin to teach younger individuals about this concept. Stop using your debit card. Seriously, because there's no benefit to it, right? When it comes to fraud, banks, take their time to return money to you on a debit card versus a credit card. You really don't care because you're like, it's not really my money. But now this is where you have to be disciplined. Because as soon as you put that debit card to the back and you move that credit card to the front, now you're going to be putting a lot of money on the credit card. But it's your obligation, if you want to build your credit score, to then go into your checking account and make a full payment towards the credit card. Now, that's what I did to build my credit, right? And again, I do have a balance on my credit card. So it's not like I'm saying I have zero balance. But if you're not comfortable with that, I think you should take one aspect of your life. The major aspects where you're spending money, gas. Okay. Say, you know what? I'm going to put all my gas on a credit card. So then at the end of the month, you take the payment of the total amount of gas and boom, you pay it to your credit card. Because at least what you're doing is you're getting some level of immediate return. Checking accounts these days, I mean, maybe 1%. Like if you're lucky, there's a 2%. Well, there's a couple high interest yielding checking accounts, that have like 3%, depending on the amount of balance that you keep in the checking, right? So some people,
Davey Cards over here.
no,
We're going to start calling you the dealer because you got the cards. buddy.
No. But some people do have access to gaining some level of money. But for the most of us, it's really not returning anything. Whereas if you can just stack some points or get a cash reward, why wouldn't you do that? Right? Dining out. That could be another option. So you have your gas option, you have your dining out option, you have your supermarket option. There's everyday life things
See, that
you could
stresses
just
me out, having all those credit cards.
But no. I'm not saying for a different credit card. I'm just saying on your credit card, stop using your debit on one of these things.
I'm going to dumb it down even more. Dana and I have been working recently on the basics, right? We got a little big for our britches. Life took over, kids, diapers, businesses, telling Mike saying you're eating out constantly. Hey, let's support this business. Let's support that business. I almost put myself out of business before I even started the business, right? Then the economy kind of is fluttering. The business dries up a little bit during the holidays. And then you snap back to reality. And I'm like, man, I'm back in the trenches of when I started the company. And my motto was just spend less than you make. Like, it came back to the simple spend less than you make. If I look at my account and I'm losing money that month, I'm not winning. So make sure that account number keeps going up. And just because I have a mortgage now, just because we have daycare is not an excuse not to get it done.
Right.
So yes, in reality, there's startup costs, this and that. But at the end of the day, you got to spend less than you make. And that's what everyone should start with. And we can argue about mindset, and you don't want to come from a non-abundant mindset and this and that. But if you can't survive and you spend less than you make, it doesn't matter what kind of mindset you have.
That's true.
Right? You're going broke regardless. So I would challenge people. I challenge myself to that. Just spend less than you make and see if you can make that account grow a little bit. Peace of mind's worth a lot.
Right.
As I'm
absolutely.
finding.
Yeah.
Right? Would you agree with that?
Absolutely. Yeah, I mean, I think we can go to my favorite section.
Oh, it's back.
Dave's Dime of the Week.
Dimes. This new microphone smells. It sounds crispy.
Mike's going to like this because some people call him the Big Buffet.
Oh, I love
But
buffets. Did
this-
we ever talk about this?
No. But this is from the one and only Big Buffy,
Oh.
Warren Buffett, not the Big Buffet. To Mike's point, do not save what is left after spending, but spend what is left after saving. Very good concept that I actually applied. This was, I want to say 5 or 6 years ago. But when I had my bills, right, I did it all on, I'm a handwritten guy. I'm old school like that. I don't like that. I'm not the big technology. So I write down all my bills, and then at the end of it, I put savings, call it 500. And I wired my brain to just say it's a bill, and I have to save $500.
It's good.
So then from there, after you move that money, just like it's a bill, now you're more able to spend money without feeling that you haven't put some money aside, right? And none of this, I mean, you can't do anything if you don't know how to save money.
The hack
Right?
I said, if you're going to buy a pair of shoes or something, you really don't need it, and you're close to buying it, but you're restrained and you're disciplined, take that $100 you were going to spend on it, put it in your savings account. Give yourself a little bonus. Say, you know what? I didn't buy this, but I was very close. So instead of buying it, I'm going to put it in my savings.
Put this on me because this is pretty funny.
You don't like that one?
No, I do this, but I buy the shoe
And then buy the
and then put the same amount in the savings. So now I force myself.
yikes.
And I'm serious.
That's a lot.
It is. But I've done that with shoes. I've done it with material things because I'm like, I'm not going to feel guilty about this.
It's not bad.
And I'm going to really squeeze myself the next month. But what I'm going to do is I'm just going to act like I doubled the price on this. I'm going to put X amount of dollars in a savings and I'm buying the shoe because I don't like, this is a
pretty
me personal thing.
Yeah,
right?
that's good.
I
like
don't like having to
deprive yourself.
deprive myself of the things that I want if I can afford them. Now, if you can't afford them, it's different.
See, I like the deprivation.
See, I don't.
Gets me hungry.
I don't like that, man. I have a good friend, man. He's a referee, retired police officer, 52 years old. Literally sitting at a basketball game, heart attack.
Jesus.
Just happened last week. That dude's sister lost not only her brother, but within the same year lost her other brother and the man that she's seeing.
It's a lot.
So these things are constantly happening around us. And yes, of course, the money, you need money to do things, right? But I personally don't like to feel like I'm deprived because then I might go binge.
Yeah.
So I like to challenge myself to say, you know what? Get it.
Just a
have the
little
peace of
taste.
mind. And then also,
Little
put it
taste.
aside. Yeah.
Little taste.
It's
Okay.
it's different
I like it.
philosophies. You know what I
No,
mean?
I like it. I do that with certain things, like building my bar. I'm like, I'm gonna just kind of keep chipping away at it.
You want to use my HELOC to build your bar?
What kind of interest rate? you
I
got?
know. I was gonna say if my repayment loan is 10%, I charge you
I don't
15.
need
I
it.
can make money on lending money.
I think it's the most gonna cost the fence. I might have to loan out the fence. I'm gonna sell advertisement on each
Yo, wait, can
slat.
can
You
I
wanna
lo-
you wanna sponsor a slat?
Yeah. Can you put my name on it?
Yeah, small space.
With
I
a
don't wanna
tag,
mess
a
up the
tag
view.
to my OnlyFans though.
I'll do a QR code.
Oh man, guys, thank you if you've made it this far. We thank you. If you've listened to 141 or you've only listened to one.
You're insane.
Yeah, right. We thank you very much for your support. Michael, the show Pirelli, please let them know where to shop, my brother.
Well, first off, like, subscribe,
Yeah.
follow.
Right.
All right, did you do it? Probably didn't do it. If you didn't do it, I see you. And if you did it, love you. NoSnoozeshop.com.
Spend that money, baby.
Spend it, right? Forget
Spend
saving.
the money. Come on. Spend
Listen,
the money.
What Dave was saying, if you're going to buy something at NoSnoozeshop.com, put it away for a rainy day so you can buy it next month.
I like that, man. Guys, thank you very much. Until next time, stop snoozing.
Spend that money, baby.
Yeah, for real. Spend the money.
Get
Here's
after
some
it.
good financial advice.
That's another Effie in the books. Go follow us on Instagram and Facebook at No Snooze Podcast. Subscribe to our YouTube channel, No Snooze.